Get ready to trade May week 3. We are already on monthly OPEX. So as usual, you have 2 expirations for Friday. The AM one is your May options, your May monthlies, and the Friday end of day is just your average weekly OPEX. But guess what else we get this week, folks? We're going to get a Thursday OPEX. Yeah, that's right. 2 weeks ago, they added a Tuesday OPEX. Now this week they're adding the Thursday OPEX. So officially, the S&P 500 has an options expiration for every single day of the week. And on monthly OPEX week, on week 3, you get 6. I'm sure that's not going to affect the market at all, right? I'd say facetiously. I think that some of the incredible volatility that we've seen over the last 2 weeks has been because of the addition of that Tuesday expiration. And now they're going to add another one. Maybe the volatility is going to be to the upside instead of to the downside. So let's see. Let's take a look at the intraday chart of the last 2 days of trading, starting with the left side of the screen where the low was on Thursday. That was the low for the week, a new low for the month, for the quarter, and for the year. The new 2022 low stands now at 38.58 and change, and this is a hold against a late March low launch point from 2021 that I gave you many moons ago, many weeks ago in a video at 38.53.50. So we came down to that point, we held, and we certainly launched off of it. Here's where we went to for the close all the way up at 39.30. This was a new closing low because the close the day before was about 39.33 or something like that. But it is a long way off of the intraday low for the year. So I don't think that we're 100% out of the woods. I do think that we're bullish for the very near term, for the next couple of days, and I'll show you why in a minute. But I do think at some point, at minimum, and this is something else that people might not be looking for, but I'm telling you in my experience, the market does not like this kind of black dead space between here on the chart. They want to have a closer, more tight back test and hold of the low for the year and a close closer to it, so that the actual low, closing low for the year is down in those 3800s as well, closer to 38.50. Maybe we backtest and hold at 38.60 to 65 and close right near the low of the day, and then come in the next day with a nice gap up, open, and go. That to me would show you that we have an interim bottom in. Until then, I think we can play a rally that's going to bring us back around to try that. And at the end of this video, I'm going to show you where we're going to go. If this is not enough to feed the beast, if we're going to head lower, I'm going to show you where and why we're going to go there. All right, so here was our day on Friday. Gap up, open, and go, setting a higher high of the day over the previous day, which was a break and a bearish setup that we've been seeing all week. Because here was Monday's high, all the way up here at 40.81. Tuesday, a lower high. Wednesday, a lower high. Thursday, a lower high. But Friday, we finally made a higher high of day over Thursday and closed over the previous day as well. So we also are above our internal lines. Our internal lines have bull crossed. We closed above our 20 and our 200 intraday line. So I think all of that rhymes with maybe continuing the rally for a couple more days next week. Let's take a look at where we would go then. Here's our roadmap. First things first, if we are going to stay bullish come Monday, we want to see a strong open either on or above the 10-day simple moving average. We haven't even been above the 10-day simple moving average since back here around the time of the Fed. This was, a couple weeks ago on Wednesday. Here was the Fed statement. If we can make it through the 10-day simple moving average, we're going to start the clock on 3 daily closes above it. If we can't make 3 daily closes in a row above it and hold, then we're going to come back down again. That's just plain statistics talking for you. We haven't done that since late March. Not since the start of the new quarter have we put together 3 daily closes in a row above the 10-day simple moving average. If we can make it through the 10-day, stick the landing, we've got this gap to fill that takes us back to 41.23, May week 1 close. Then we have the 20-day, which is probably going to sink to around the 41.80s. So we'll be going after the 41.80s. If we can get to 41.80, 80 handle rule kicks in, we go with 4,200, and then we move on from there. If all of this works, all of this holds, maybe we get another couple days of rallying that takes us up to fill this gap in here at 4,300, taking us back to the Fed. Fed day close, and lo and behold, here is our 50-day simple moving average. We have a clear breakout point where we have been getting stuck at 43.10. We've been taking little looks above 4,300 and failing. We need to break out over 43.10 and hold, break out over the 50-day. Otherwise, this is going to be the sweet spot to get short. This is where you want to get short for that move back down here to try and tighten up this area between where we closed and where our intraday low of the day was on the week we just traded. All right, looking at our bear fork on our more simplified S&P 500 chart, look at where the top of the bear fork is. It's right in line with the 50-day. So this move up to the 50-day is also a move up to the very top of the bear fork. If you've been with me a while, you know what this means. We've got to burst out of this bear fork, otherwise this is the spot to get short for a move back down lower. Okay, you can see that here were our lows all last week. We started breaking down below the median line, looking below the median line. And then on Thursday, our open and our very high of the day was a kiss on the median line and fail. But then on Friday, we opened on the median line and took off. So we need to see an open on the 10-day and take off on Monday. And that's going to get us all the way up here to the top of the fork where we can get short up here for, at minimum, a move back down here to try and close up the space between the close and the intraday low for the year. Okay, so as promised, here comes the really bad bearish news. What's going to happen if our low is not in yet for the year? Our low so far is just shy of 20% off for the year. That's a pretty decent pullback, but what if it's not enough to feed the beast? A lot of people have been coming on CNBC talking about getting down to the 3,500s. Starting with about a week and a half ago, Thomas Patterfy, dude who started Interactive Brokers, notorious bear. And I remember the commentators laughed at him after they got off the air with him. They're like, 3,500, my God, what is that? That's going to be like 30% off for the year? My God, that's another like 500 points from where we're at now, because at the time we were like at 4,000. They all laughed, but then since then, there's been about 3 or 4 guys that they've interviewed on CNBC who are talking 3,500 as well. All right, what is so big about 3,500? Well, at 35.90, we'll be 25% off on the year. And at 35.05, I'm pointing down here to the bottom of this chart, we will be at the halfway back point between the COVID low set in March of 2020 and the all-time high set this year at 48.18. The halfway back point between those two is 35.05. So from 35.90 to about 35.05 is the spot that a lot of these guys are looking for now for us to move down to before the real buying and the real recovery starts in. If we were to follow our fork down there, the bottom of our fork's gonna hit it May 26th. Yikes, so that would be the week after next as we go into Memorial Day. The median line meets the halfway back point in late July of this year. So maybe a scenario where we break below, we make a new 2020 low, and we just kind of like 2022 low, and we just kind of walk our way down the median line, chopping like we just did this week, chopping our way down the median line till we get to 25%, till we get down here between 25% and the halfway back point in the year over the course of this summer. Now let's take a look to the left here, and why are these lows that we have just set important, okay? Well, here's that March 25th low from last year. Here was the actual March low. A lot of people were looking for a full-on back test of this low, but all we got was this, and from here we launched. So this is the way they catch people short, and it fuels the first leg of the rally. People start believing in it. We get a little pullback, and it launches into an even bigger rally, an even bigger pullback, and an even bigger rally. So that's what this stuff is all about, where we're at now, testing this launch point and seeing if the market doesn't want to give all this stuff up down here and ends up, squeezing people who keep shorting it, trying to get it down here. If we're going to dip below this March 25th low, we have that actual March low here that would probably get us down to about 3,700 or so. And below that would be the actual low from 2021 set on the very first trading day. I'm pointing all the way to the very left side of the chart. The very first trading day of 2021 was the low for the year at 36.62. When we back out this chart even further, all the way back to where we can see the COVID low, here was the March low. Do you know what do you know what the 2020 low was at, exacerbated by COVID? It was 32.15% off of the 2019 close. That's what that low was. Right now, where are we? We're not even quite 20% off. So that's why these guys are looking for that 3,500. And I think why they're looking for that 3,500 is because it's just gets you not as bad as what the COVID sell-off was, but somewhere in the neighborhood of it. A little over 25%, between 25 and 30%. What was going on at those levels back here in 2020? The first major high and sell-off after setting the COVID low here in September of 2020 was right here where our 35.90, 25% off mark was. And then here was some consolidation. Here was a look above where our halfway back point is. So here's where we doubled up from to make our high here in 2022. And then you can see here was the breakout kind of consolidation and then the move out of that area. So a lot of activity was going on in here. A lot of pent-up anger was going on in here. So Thomas Petterfee and his ilk are looking for a move all the way back to this area here between 35.90 and 35.05 or so. Okay? Now, like I said though, either A, we are going to fail miserably out of the gate on Monday. Maybe we'll calculate the halfway back point between Friday's high and Thursday's low and see if maybe we hold in there. It's probably about Friday's, maybe holding against Friday's low once again. If that holds, maybe we continue once again going for the 10-day, the 20-day, the 50-day, filling these gaps, trying to break out of the bear fork. Or maybe we start right in to this little sell-off here that tightens up this space and we launch from here and leave those 3,500 seekers in the dust. Or maybe we're just going to break down and start the journey to those 3,500s now. But for now, we have this 38.50 level in here that we have held, and maybe we just need to tighten up this space, hold a higher low, and close closer to it so that there isn't so much space between where we closed on the day and where our intraday low was for the year. Okay, that's it from me for now. Hope this video helped you out. Hope you learned some information here. Hope you see what's going on right now and not feeling so bad about this market anymore because we're not even 20% off yet, whereas in 2020 during the COVID sell-off, we were having day after day lock limits down in the overnight and futures, and we made our way down to over 32% off of the close of the previous year, and now we're not even 20% off of it right now. Okay, so think about that, and don't feel like you missed the whole move down because my God, if we got up here to this 50-day all the way up here and failed, even if all we did was come down here to achieve this goal of tightening up this space, that would be a heck of a short. And if we broke down below this, it could be the short of a lifetime that takes us all the way to 3,500. All right. You have a great rest of your Sunday. As always, good luck and good trading.